Morning, everybody. Thank you, Julie. Thank you, Peter, for having me. It's actually my second decade here at CES with the wearable tech folks. I get to say that since we're in 2020. I've now had a couple times of an opportunity to come up and talk to you from a venture capitalist and investor's perspective, what's going on more macro in the wearables market. As you guys just heard in a lot of the panels this morning, we've been going very deep on specific topics, but I'm gonna try to take a step back and lay the land, and I'll go through a few slides here, but give you guys a chance to ask me some questions at the end. So where are we on the whole journey of wearables from kind of a market size kind of perspective? I like to use IDC, International Data Corporation. They're one of the premier market research firms, and their last reported data, which goes back to Q3 of last year, has put out a number about 305 million worldwide units shipped of wearables. And the particular categories of wearables that they are in tune and tracking are things that go on your ear, things that are watches, things that are wristbands, and then a whole bucket that is all other. But I think what's interesting here is that the market research firms now are really starting to track these particular categories. Earwear primarily is kind of headphones, audio, AirPods, things like that. Obviously, the smartwatch is being championed and led by Apple, and then the wristbands is all the Fitbits and a lot of the other things that we've seen over the years on that front. The question I have always wondered is, what is the fourth major category that's going to break out in a significant volume perspective such that the market research analysts will begin to kind of study it? This was Q3. Obviously, we know seasonally we go into Q4, which is holiday season. We should expect to see larger numbers than this based off of what everyone's saying about how the holidays went. The other interesting thing that's starting to evolve here is that we now see 5 dominant global brands that are driving market share from a shipments perspective in wearables. They're all household names that you guys know. They're all here at CES: Apple, Xiaomi, Samsung, Huawei, Fitbit. And what's interesting is they don't all have equal strength in each of the wearable categories. Some of them are stronger in certain product categories and weaker in others. Apple has dominant share if you look at the left-hand pie, primarily because of the watch and then also because of the AirPods. But Xiaomi has shot up, and probably you guys didn't realize that they were such a big global player, especially in Asia and the rest of the world, with their wristbands and some of their other products. Samsung is hanging in there with a lot of different products in their portfolio. And then if you look further down, we all know the Fitbit story, especially here in the US, about kind of where they started with the wristband and then started to move in the watch and everything like that. The right-hand pie is a little bit more specific to just the things primarily on your wrist, the watches and the wristbands. And then you can kind of see the market share starts to change a little bit more. What's notable here is that we all take for granted how large the market has become in wearables for these product categories outside of the US in particular. So that's why you see Xiaomi, Huawei, a lot of the Asian manufacturers starting to dominate on that side. And also Samsung is pretty strong too. But 2019 was interesting because I would say Google really got serious. We've been tracking Google. You guys, I'm sure, have as well. They've had a lot of fits and starts with various wearable kind of initiatives. But I would say they took out their checkbook in earnest. The headline transaction was their acquisition of Fitbit in November for about $2 billion. But they started off the year with a very stealth acquisition of some technology from Fossil and their kind of watch thing. So couple things I want you guys to take away from this slide. The first thing is, as great of a run as Fitbit had on a standalone basis as a venture-backed company that got to an IPO, their greatest market cap was the time when they first went public. And you can see the chart on the right where after a certain period of time, it just pretty much flatlined. And that's why their board of directors and their management team made a decision that they ultimately needed to sell the business and put it in the arms of a larger organization with greater resources to continue to further the journey that Fitbit ultimately had. The other thing that's interesting is the government's reaction to Google being the acquirer of Fitbit and the fact that the Justice Department immediately raised its hand due to a lot of public outcry about what is Google or other big tech going to do with the data that wearables is starting to spawn. So I think that's an increasing topic that we're going to need to pay attention to as an industry, which is the data that we're so cherishing for a lot of what we do with the software around wearables is now on the radar for government regulators, and they want to know what manufacturers are doing with it and how users' rights and privileges are being protected. And then the other thing I would want to kind of articulate here is that Google won a bidding war against Facebook for Fitbit. So I don't know how many of you guys knew that. There were two parties that ultimately bid for Fitbit. 6 or 7 companies, global companies, we could kind of guess who the others might be, were offered the opportunity to buy Fitbit, but ultimately 2 bid. They were Google and Fitbit. Google and Facebook. And that battle between the two of them went back and forth for a series of rounds before Google basically won. If you are into reading SEC documents, you can read a particular filing that Fitbit had to throw out there, and you could see the back and forth on the pricing before ultimately they cleared it. But Mark Zuckerberg was heavily involved in the negotiations and had sat down with James Park numerous times at Fitbit to see if he could kind of get him to come over, but ultimately Google prevailed. Now, what about Apple? I would say Apple has kind of been the engine that could. And right around the holiday season, you started to see a lot of Wall Street analysts come out with projections for 2020. And Apple has had, through the second half of 2019 in particular, some bang-out quarters where sales of Watch and sales of AirPods have started to dominate their P&L relative to the traditional product lines. So what does that mean? The wearables category, which they actually disclose in their financial statements, is as big from a revenue perspective as the entirety of the Mac product line and what they sell from that now. And because there's been a slowdown in Apple iPhone sales, the reason why the stock continues to move forward is because of wearables. So I think this is really interesting. In the back half of 19 going into 20, we have Apple for the first time relying on its wearables franchise to continue to push the growth and the market cap and the leadership that they've become known for. So let's see what happens in 2020. Between the Watch, the AirPod line, other things that they're working on, which we'll get to in a second. But beyond the big guys, what's going on in kind of the startup world, the private company world? What's interesting here is that venture funding is still available for high growth startups. And it's across a whole array of categories. So Whoop is a Boston-based company that has a wearable particularly for performance athletes and helping them track their performance and their rest and getting them for kind of peak optimal condition. Aura is a London-based company that has a ring. And the ring is particularly well suited for sleep tracking. And right now, it's become a fashion piece and kind of a nameplate for techies in Europe and throughout the world. And then Eargo is this whole new category that is starting to emerge, and I keep waiting for it to break out more around hearables, beyond just kind of like the audio sound kind of world, but hearing aids and kind of smart hearing aids and revamping that whole process where people who need a little bit of an assistance on the hearing side can leverage technology and software on that front. These are all meaningful rounds that they were able to get, but these are also companies that have been around for a few years. So these are not overnight successes. They've all been on a path for many years before they got to this point where they were able to show growth and therefore attract such large funding. But what's the pipeline behind kind of those three as a case and an example in 2019? So I've always liked to look at crowdfunding sites like Kickstarter and Indiegogo because a lot of hardware manufacturers, a lot of wearable manufacturers, a lot of IoT makers use those platforms to basically test demand. They use those platforms to solicit funding. They use those platforms to basically put out marketing and drive buzz around their products. As you can see using Google search as a proxy, the amount of search traffic for people looking for Kickstarter, Indiegogo, and other crowdfunding platforms peaked in 2015, right? It crested somewhere along that, and then it has kind of come down thereafter. And over the last 2 years, consumer traffic to both Kickstarter and Indiegogo, who are the two premier crowdfunding platforms in this category, has been flat to slightly down. And you can also see that Kickstarter is historically about 4 times larger than Indiegogo. So what this leads me to conclude is the backlog of entrepreneurs and founders and products that are trying to come to the market is going to be a lot lower going forward than what it was in the heady days of 2013, 2014, and 2015. So where does that leave us from kind of a hype cycle? This is kind of our own internal analysis. If we had to take the Gartner hype cycle and try to disambiguate wearables as a macro category and plot the individual products on a maturity kind of scale, what do we think it looks like? So I've placed wristbands out to the far right. That's not a new thing. We've been talking about that for a decade now. We all know who the players are. If anything's a little bit fatigued, as evidenced by the Google Fitbit transaction. I think watches are pretty dominant. You know, if we probably did a straw poll here, there's a bunch of you that are already wearing smart and connected watches and all that. But there's kind of a little gap beyond that. You know, what are the other categories that are still trying to work their way through it? Is it VR? Is it AR and head-mounted displays on that side? Is it smart jewelry like these rings that we're seeing? Is it glassware and other head-worn kind of devices, which I'll talk to in a minute? Or is it more things that are still kind of working their way into kind of prominence and existence? That could be hearables, right? Like the Eargo thing that I talked about. That could be a lot of brain tracking, brainwave tracking and measurement kind of devices that you know, especially in conjunction with the meditation and the behavioral health movement that we're starting to see. And then we've always long kind of wondered and envisioned kind of smart clothing, connected clothing. You know, when does that really come to rise? So we just kind of plotted a few of our favorite wearable subcategories on this maturity curve. And, you know, from a venture investment perspective, and also for a lot of the analysts out there, they're moving beyond the traditional categories and looking for kind of what's next. One of the areas that's particularly interesting based off of a lot of product announcements in 2019, and also a bunch that you've probably heard here at CES, is glasses, right? Apple is probably the big elephant in the room that people have been waiting to see what are they going to do with AR glasses. Facebook has announced that, you know, they haven't really announced, it's been uncovered that they have a whole group that's working on a mobile operating system to facilitate a whole genre of wearable devices so they are less dependent on Android for kind of their future state on that front. Also dovetail well into their Oculus and some of their other hardware initiatives. A Canadian company by the name of North has also been working on smart glasses for a while. And then I think, you know, you look at Snap, that's captivated the imagination of millennials and the youth, and it's very readily adopted by that demographic for the use case that they are pursuing. And then you see some other folks that are coming out. Nreal has a bunch of people that come out of Meta and Magic Leap in the AR world. And then Bosch this week has also announced, you know, hey, that's a preeminent kind of eyewear manufacturer and brand that they want to get into the game from a platform perspective. So potentially a lot to come in the glass realm. Historically, that's been the domain of Google Glass. That's been the domain of Magic Leap and Microsoft HoloLens. But, you know, so much more wood to be chopped in this particular product category. And then lastly, smart clothing. You know, I had that on the prior slide. It was very apropos as I was getting ready to submit this presentation in for this talk that the Wall Street Journal had a feature article on this particular topic, right? What we are starting to see is a lot of entrepreneurs tinkering with things like embedding sensors into clothing, embedding displays into clothing, making that stuff connected so there's context of what the person is feeling, what the person is doing, being able to react and being interactive from the material back to the individual. And also the whole exoskeleton movement and augmentation, leveraging kind of these materials and brand new material science going into this field. This is particularly interesting to us and might be the future of wearables too. So, my closing thoughts are really the following. We've been talking about wearables for a long time. I've been up here for many years now. I think it's frankly a tale of two cities. There's haves and have-nots, right? In the private world, we look at companies that are able to raise a lot of funding, and then we look at a lot of other companies that have equally interesting novel inventions and technology and science and algorithms, but are not able. So, clearly there is segmentation in the market on that side. I think we're deep into this wearables game such that the herd has thinned out, as I like to say it. If you are in this business today, you are committed to this. This is not for the faint of heart, because all the early buzz and the hoopla around it has already come in the many years beforehand. As the panel before me, we're talking a lot about where on the body do wearables really move to next beyond the wrist. Is it all the eyewear and the glass stuff? Is it full body stuff? What else beyond simply the wrist? Because I think we're starting to fatigue and there's only so much real estate on that front. I think it's very interesting to continue to track the big five, those 5 global brands that I talked about earlier. What is Apple going to do? What is Fitbit going to do? I think Facebook may be a dark horse to kind of jump into that game, given that they missed out on Fitbit. There may be other things they want to do there. And obviously the Asian players cannot be forgotten in this conversation as well. And then lastly, which I think you guys have heard throughout the conversation here today, is we got to get back to use cases. We're still looking for killer apps that sustain the actual ongoing wearing of the wearable and the engagement of the wearable. I think that's something that still needs to be solved by the entire industry, and is not quite there yet, but it's something that we also are keeping an eye on. So that's it for me. I don't know if I've got any time left or if I'm out, but happy to take 1 or 2 questions.
Questions? All right. Oh, here we go. Down here in front, please.
First of all, thank you for giving that presentation. It's really insightful. My question is, what are you looking at when you're looking for wearable technologies to invest in? Whether that's, if it's trending topics, or is it like high innovative, high bar of the technology, or in terms of use case. As a user myself, I have a problem with having too many earphones, and they all have great features. So I think it'll be interesting to hear from your perspective.
Yeah, I mean, a data point of 1, but I know a lot of other venture investors think the same way. The bar is higher. Used to being able to prove you can manufacture and ship was a good accomplishment. That's taken for granted these days. Used to be like, can you do 10,000 units a year? That's not interesting. 100,000 units may not be interesting. It's got to be 1 million, like much higher bars on that front. I go back to like, what is the compelling use case, right? Like, I think we've all proven we can build hardware, but why are people going to use that thing on a day in, day out basis, whatever your particular use case is, so that it is something that is not bought and then put in a drawer or kind of churned off of within a limited period of time.